My name is Peyton Kutcha. I'm your room captain for today. Thank you for being here. We're so excited to have you. Welcome to day 4 of SaaS Innovate. You've made it. We are approaching the end. Pat yourselves on the back. Give yourselves a round of applause. We have done it. We are all the way through, and we have some amazing presentations for you to close it out with a bang. So some of you may know this, some of you may not. SaaS has unparalleled decisioning capabilities in SaaS Viya and in SaaS 9. Just in SaaS Viya. But we've got Ioana, and she's got an amazing presentation to talk to you about some of the use cases we're doing in insurance with our decisioning platform. And before I get into too much depth, she'll take it away.
Thank you, Peyton. First of all, thank you so much all for being here. And I know that it's been an effort considering the party last night and being the last day. My name is Ioana Avramescu. I am the leader of Insurance Risk Solutions at SaaS. And today, I'm going to continue the journey, what you heard over the last couple of days, on decisioning, and specifically on decisioning in insurance. We were going to tackle 2 main areas whenever we think about decisioning in insurance. One on the liability side, linked to the automatic underwriting, and the other one on the asset side, linked to the automating the strategic asset allocations. So by having said that, we actually starting looking on that, of course, because there is a lot of pressure on the market coming from the challenges that you are exposed on a daily basis. Challenges coming from geopolitical tensions, challenges coming from the market volatilities, business impacts, regulations, but also all the tech infrastructure evolutions. We, on top of that, at SaaS, we have started to work with more than 500 insurance executives in end of last year. And we have run a study, of course. It is available also on our website. I'm going to share also all the materials and all the links after the session so you can read it in much more depth. But out of that study, what it came out, very important elements, it was linked, first of all, looking on reducing the cost and also minimizing the whole underwriting and all the operations. So whenever we look on all the details of the study, we see that this is a key element in order to stay ahead, and it's also a key element in order to gain much more advantage in the industry. And we could see 46% answering in that direction. Then 3 out of 4, they actually were very much looking on lack of trust in industry in order to have more tailored products for different groups that are much more vulnerable in order to close the protection gap. Then on top of that, the last one, it was linked actually to modernization and to growth, because we know that we have a lot of challenges within different players within their systems where they are working still in silos and they take decisions, for example, in actuarial departments, sometimes not so well connected with, for example, fraud departments, not so well connected with marketing and commercial other departments. So by having this coming all the way together in one single layer of decisioning and embedding all these decisions, for them it was quite crucial. Last year when I was here at Innovate, well, not here, but in Las Vegas, we are discussing about automating the onboarding process. And we are discussing, of course, significantly on the process whenever you start as a user, as a policyholder to apply for an insurance policy. There are certain steps that behind the scenes the insurers are taking in order to have much more faster and accurate response when quoting a premium for their customers. But today, we want to focus more on automating in this process, specifically on underwriting. And then when we think about underwriting, of course, there are multiple steps that we have to consider, but the simplistic part, let's say if we think about multiple policies coming all the way together from a, let's say, life or health provider, the initial step is actually that we have certain rules that we would like to apply, certain elements that we would like to apply in order to triage all these policies and to assure that we have a faster path of, let's say, plain vanilla policies, the ones that are quite simple and posing no issues, to be fully automatically accepted and going directly to quotation. Of course, considering additional business rules, additional, let's say, loadings and so on and so forth. Then the ones that are, let's say, not so convenient for my portfolio, or for example, the ones that I don't want to cover, I will simply decline them. And the ones that are a little bit much more complex, they might have, let's say, certain conditions when they declare all their informations with you, during the submission. At that moment, that policies, they would require some special attention. And those policies, they will go directly to underwriters in order to be reviewed and, of course, maybe to go through some additional, let's say, case management. But let's start with the first one, right? And as you can see in here, basically, we start from all what has been pitched these days. We start basically from decisioning, where we have embedded in the decisioning for underwriting a model that actually helps us in order to triage the policies. And based on all those results that we have within the triage, automatically we have some business rules that basically create all the underwriting probabilities in order to split those policies in those three categories that we were mentioning earlier. The ones that are accepted, the ones that are declined, and the ones that they require the special attention. And of course, whenever we go back to the decisioning flow, for the ones that are accepted, we have a path forward in order to apply additional business rules to take all the additional loadings that we have to consider in terms of cost, for example, whenever we think about all the administration costs, or additional loadings in terms of certain symptoms that those customers of ours, they have. And of course, for some of them, we may have further breakdown in different lookup tables that will allow us in order to manage heavily all these, let's say, parameters. Of course, the data that you could see in here, it's actually quite, let's say, anonymized. But whenever we go finally to the final quotation, the customer will get, let's say, that price based on all these parameters. So now, on the output, of course, I am also available. I have capabilities in order to explore and visualize which are the customers out of that daily batch of analysis, let's say, are accepted, which are the ones that are, let's say, declined, and which are the ones that they will be prone for further investigation. And as we can see in here, we have more than 1,600 approved and 345 to be revised. At that moment, in my process, actually, I'm ready to go to the next step, where basically I am going in a case management review in order to understand what is going to happen for these specific customers, what is the information that I would like to address, in order that at that moment I am actually asking, for example, the agents, or I'm having some persons within my organization in order to call the customers and to ask for additional information. I might send the customers in order to have additional medical checks. And then with all this data, I take the final decision in order to approve or decline the customer. So as we remember from the previous, let's say, slide 2 minutes ago, we are having 345 customers, and I can have them listed in here. And then if I want to start the investigation, me as, for example, a person from the investigation team, I start looking directly within the case management system, and I can see in here, again, those 345, where I have the underwriting case review. So I can start looking at them, and then I can look, for example, that there are some statuses that I have, a need in order to ask some additional questions. For some of them, there will be additional statuses in order to go to some medical checks and so on and so forth. But for the ones that we have basically some additional questionnaire, I can start the process where I'm asking additional information. I have to put all the, let's say, the messages that are linked to the case management. So then the process starts, and then automatically the agent or the person that is helping in order to find out all this information for the customers will get a message, and then we'll start the procedure. So during that process, whenever a user is not so sure what are the next steps within this case management review, of course, they can also check the workflows behind the whole process. So they can see, for example, we start the questionnaire, I can assign it to an agent, I can start answering by calling the customer directly, then it goes through a scoring, and then automatically we get the final answer. But what is very important, it's actually that all this process that we have in here, it's so flexible and so adaptable for your business according to your own needs. Because you may add additional steps in between, you may ask additional information, and of course, you need to have this flexibility. And this is the beauty of SaaS, the beauty that has been presented over these days heavily. Now, we have basically starting the task. So basically, as you can see, we have answering the questionnaire. I can have the possibility in order to assign it to another agent, reject the whole analysis because it's not necessary, but let's take the route of answering the questionnaire. So immediately I will simply call the customer, and then I will ask all the questions on the fly or directly with the agent, depending on how it goes. And then once I save it, it will go in the management review, and then the management will actually ask for the scorecard in order to triage all this information. At the end, the message will basically say that we are ready in order to review all the results, and then we can see basically that during the final step within my report, I would have, instead of all these 345, I think it was, we were going to have 344 policy, and one has been accepted, and the process goes on, right? So it's automatically updated on the fly based on the answers that we get from the modeling scorecard. Of course, there are certain persons that they will like to access all the behind logs to understand exactly what's happening, or for example, what are the answers from the questionnaire. Everything is stored in the system, and they can go forward with their analysis. This is one example, and as mentioned to you, this is one example that comes directly from the liability side. Whenever we think about insurance decisioning at SaaS, we think about insurance decisioning not only for personal lines, but also for commercial lines. We think about insurance decisioning in multiple areas of your organizations. So like that, we can tackle certain topics with our technology, with our solutions on the liability side, but also on the asset side. Like, for example, when we think about acquisition of the customer, I need to understand, for example, the behavior of the customer. I need to understand, for example, what are the best policies that this customer would require in order that I assure that he will not gonna leave my portfolio within the next year. He will gonna be a happy customer. He will not gonna look for any other policies outside, and I will have a good relationship with it. Then on top of that, on the asset side, I would like to understand a little bit the profiling and to have all the assessment of all of that on the acquisition. Of course, on onboarding, we had a lot of discussions last year, and if you are interested to find out more, I have also another example that I can connect with you afterwards or even after the conference. It doesn't mean that we will never see us again after leaving from here. But multiple other cases are coming on your portfolios that you would require a lot of attention. And then, of course, whenever we think about asset side, whenever we look a little bit on the strategic asset allocation, I would like, first of all, to pause and think with you, what is the strategic asset allocation? what do we understand on strategic asset allocation? First of all, whenever we think about life insurance and pension funds, this is crucial because we need to assure that the investments are aligned with all the long-term financial goals in order to manage all the risk. And this, of course, this approach is helping you in order to have a better balance between the risk and also the return. So like that, you're gonna have a sustainable growth. At SAS, we actually have certain steps whenever we look on strategic asset allocation. First of all, we establish the primary objective. Then we have a selection of the mix of assets, such as equity bonds, in order to diversify all the risks. Then we have all the portfolio optimization techniques that can determine the optimal weights for each asset classes. Then we have the weights assigned to different specific investments in order to assure that each asset class is balancing the strategy in order to maintain target allocation over the time. We have all the implementation process in real time with all the validations in order to assure that we are checking against the market conditions. And then we review and monitor the portfolio performance on a daily basis in order to assure that we are going in the right direction. But now, what does it sit here? It's actually, again, the decisioning. It's all coming back to whole decisioning layer that we have heard over these days. And whenever we think about intelligent decisioning in this case, with all the elements that we want to address in the strategic asset allocation, there are three main areas that we would like to have a look. First of all is the leverage, in order to understand to which company we are borrowing the money to finance the operation. And then here we have, of course, certain elements to look, for example, debt to equity ratio. We have also the interest coverage ratio. On the profitability, we have to understand, for example, the company's abilities in order to generate all the earnings related to expenses and costs. And then in here, we have the return to equity, we have the return to assets, but also earnings per share growth. And as well, we have the liability measures for looking a little bit on the company ability in order to meet the short-term obligation in case if something happens. And this is the current ratio. All these metrics are actually triggered as business rules in the decisioning. So like that, together with all the models that we are using in order to have a better understanding of all the global macroeconomic conditions, we are ready in order to move the needle forward and to establish the right limits for all the next steps whenever we are looking on the strategic asset allocation. And our platform integrates, as you know, multiple models, multiple statistical techniques with more than 14 data access engines. However, the ones that I would like to mention in here, of course, they are the vector autoaggressive moving average models, the machine learning, the Bayesian econometrics, but the one that we used in this specific demo, it's actually the hidden Markov models. And then if we are looking a little bit, let me see if it starts. Yeah, if we are looking a little bit on this specific demo, as mentioned to you, we are using the hidden Markov models, which is basically a statistical procedure in order to describe the probability between the sequence of observation and the sequence of the hidden states. And whenever we are looking a little bit forward in here, the hidden states are all the underlying variables that are generating the observed data, but not directly observable. So in here, we are having two atomic models where we are using a Hamilton specification in order to understand what is the regime switching between the mean adjusted autoregression model in order to use it under comparison with the gross national product data. And this is plotted, as you can see in here, with all the results. And we can see, for example, when it was the crisis in 2008, we can see the crisis of COVID. And further down, we also use this in order to identify all the market states for the equity and bond indexes. So like that, we can have a better understanding how we can identify the bull bear in the, and the neutral stock market regimes. Whenever we are looking at the results of the models, you remember that we had two atomic models. We have the sections where we can compare them, and then we can understand to evaluate and all the competitive models using different criteria. So like that, we can take the champion model for the next part of the decisioning, where again, as you can see in here, we start embedding on the top the model that we found as being the champion one. And then we can go further down in order to get all this information extracted and also define certain allocation limits in order to get all the company risk tolerance, but as well the long-term investment strategies. As we can see in here, we are having all the connections also with the market states. We are also having all the elements linked to all the limits that we have for the risk on strategies, but also for the risk off. And then we can see, for example, elements linked to financial real estate are evolving better in the early cycles, but the ones that are more linked to consumer or healthcare, they are behaving better on the late cycles. So all this information are actually presented, of course, in the final stages whenever we go in the reporting layer. And then we can understand, for example, the results of the strategic asset allocation in order to take the final decision how to invest and how to progress with my portfolio within my assets classes. So on top of that, there is also the information that we are getting in here. It's also getting need in order to have calculation of specific risk measures. It is having the need in order to have automatic batch processing, to have certain limits applied. And here we have the combination with our risk engine that actually allows us in order to create all these elements, to have all the profit and loss analysis, to have all the performance analysis. And on top of that, whenever we go in the final stage, we have the view of Efficient Frontier telling me exactly where I should invest my portfolio and how shall I allocate all of this based on the data that I have analyzed. So coming back to all the information that we are discussing in a very fast forward method, it's actually giving you the main benefits whenever you think about an insurance enterprise decisioning platform. It gives you the performance, first of all, because we have all the elements coming from the VIA platform embedded in the technology within our solutions. It gives you also all the productivity because all the business users can focus more and more in configuring and simulating impacts of their models and their strategies. And they have very easy systems in order to address all their business rules in a faster time to manner. And it gives you also the whole trust because we have strengthening all the governance, all the auditability and documentation in one place, in one single environment. So like that, you're going to have a faster time to market, faster time to value, but also fully consistent because you are bringing all the decisions in one place. And I'm going to close in here, actually, with a customer use case that actually started to look a little bit what are my benefits if I modernize to the insurance enterprise decisioning with SaaS. And they have actually started looking from the first element of disconnections between their departments and their processes. Then they were looking a little bit in order to enhance the governance and as well to boost all the performance within their systems. The approach is actually that they have modernized within their risk and fraud portfolio in order to integrate all the data, all the models in one place, in one decisioning ecosystems, So like that, they could gain the whole collaboration between their people, between their peers, and between their processes. And like that, they could improve their mechanism in fighting fraud, improve their mechanism in generating all the quotations for the customers, and the whole decisioning, combining all the strategies between the fraud and risk. And with that, I would like to close and open for any kind of questions.
Thank you, Oana. Everyone give it up for Oana.
Thank you.
Are there any questions in the crowd? Just raise your hand and I'll bring the microphone over. Oh, we have one.
Hi.
Thank you so much. Briefly introduce myself. I'm Megan Sun. I'm from RSM US, which is a smaller size consulting firm. I have some experience in the automated underwriting. We have done the model validation for insurance clients. And one thing I really like for this solution is, it's as you mentioned, it's all in one. Because some automated like underwriting model I have seen is they leverage on multiple like engines or software or systems. For example, the admin system could be here, and then for the risk profiling, we usually leverage on the predictive modeling tools, and then after that we score kind of the new applicants, and then after that all the data will go into another underwriting engine that could be another third vendor tool. And then in terms of the decision tree, right, kind of for easy cases, directly they can either directly decline or kind of accept it. That's the automation part. But for the 345, kind of that need a manual underwriting, they will kind of go to a different like stream to go to the underwriters. For them to do some further review. So I really like this like all-in-one kind of solution because from my data like perspective, anytime if we have a process node, like if we need to transfer the data from A to B, there's some like possibility to have data issues. So I really kind of interested to learn a little bit more about this one so that in future I can better serve my financial clients. Thank you.
Thank you so much for your questions, for your comments, first of all, because it was a statement mostly. But what is important for you and what is the message for us, and this is exactly what we wanted to convey in here. We are having one system based on SaaS Viya where we are plugging all the requirement elements in order to sort out business problem. And for underwriting, we know that we have to connect different dots within your organizations. And this is one example that can help and boost all the processes around underwriting. And of course, it doesn't stop there, right? We can go even much more automated in certain processes. And of course, we are looking in order to do that and looking to have ideas from you. So please contact us in order to get to the next level.
Thank you so much, Oana. Are there any more questions in the crowd? Oana is available to answer any questions you may have. We will be moving on to our next session. Let's give it all up for Oana one more time. Amazing presentation, amazing technology. Thank you so much.